Hi, folks. Welcome to our weekly market update, where we break down what's happening in the stock market and economy. I'm Berk, and today we're reviewing the holiday shortened week of April 14th to the 20th. We've got market swings, company earnings, economic news, and a special take from Dr. Ed Yardeni that might surprise you. So grab a snack and let's get started. First up, let's talk about the stock market. Last week was bumpy. The S&P 500 dropped about 1.5%, the Dow fell 2.7%, and the Nasdaq slid 2.6%. Ouch, but here's the thing. The S&P 500 is still up 6% from its lowest point this year on April 8th. That shows some strength, right? Why all the ups and downs? It's mostly because of President Trump's trade tariffs. On April 14th, the White House said no tariffs on smartphones and computers. That's good news. Tech stocks like Apple jumped 2%, but then, on April 16th, Federal Reserve Chair Jerome Powell warned that tariffs could raise prices and slow the economy. Markets tanked that day with the S&P 500 down 2.2% and Nasdaq off 3.1%. Tech and chip stocks got hit hard after the U.S. restricted chip exports to China. By April 17th, things calmed a bit, but the Dow struggled because of a big drop in UnitedHealth Group shares. Now here's where it gets interesting. Dr. Ed Yardeni, a top market expert, dropped a report on April 20th called Contrarian Indicators Showing Too Many Bears. What does that mean? Basically, he thinks people are way too negative about the market right now, and that could be a good sign for investors. Yardeni points out that The Economist magazine ran 3 super bearish cover stories in a row, warning about a dollar collapse and market chaos. He says that's rare. When everyone's this gloomy, markets often bounce back. He also found some cool data. For example, the odds of a recession jumped to 56% by April 18th, up from less than 20% in January. But Yardeni thinks a recession isn't guaranteed unless a lot of bad things happen at once. He gives it a 45% chance. Plus, surveys show investors are super pessimistic. The Investors' Intelligence Bull-Bear ratio fell to 0.74 on April 15th, way below its usual 2.39. That's a big drop in confidence. And 44.5% of people think stocks will keep falling over the next year. Younger folks under 40 are especially worried, with only 31.8% expecting stocks to rise. Yardeni says all this negativity might mean we're due for a rally. He warns that giving up on 2025 could be a big mistake. Let's shift gears to the economy. The news here was mixed. Retail sales in March grew 1.4%, way better than February's 0.2%. That means people are still spending, maybe because they're worried about tariff price hikes. But consumer confidence? Not so great. The University of Michigan Sentiment Index dropped to 50.8 in April, the lowest since June 2022. Tariffs are freaking people out. Inflation worries are up too. People now expect prices to rise 4.4% over the next 5 to 10 years, up from 4.1% last month. And manufacturing and housing might be slowing down. Industrial production likely fell 0.3% in March, and the housing market index was expected to dip to 37. Jerome Powell at the Fed said they're watching all this closely, but won't rush to change interest rates. It's a tricky time. Next, let's check out company earnings. Over 58 big companies reported last week, and overall S&P 500 earnings are expected to grow 8% for the first quarter. That's down from 12.2% expected earlier, thanks to tariff fears. Here are some highlights. Bank of America crushed it, earning $7.4 billion, and its stock popped over 4% on April 15th. Netflix also had a great week with 13% revenue growth and a new ad platform. Its shares climbed 5%. United Airlines beat expectations, and its stock soared nearly 7%. But not everyone did well. UnitedHealth Group missed earnings and cut its 2025 forecast, dragging the Dow down. J.B. Hunt Transport fell 7.7% after warning about tariffs. Johnson & Johnson beat earnings but dipped 1% because of tariff worries. Big banks like Goldman Sachs and JP Morgan did okay, but their CEOs sounded nervous about the economy. And keep an eye out. Tesla and Alphabet report earnings soon, and they're down 40% and 20% this year. Those results could shake things up. A few other things caught our attention. Gold hit a record $3,350 an ounce on April 16th, up 25% this year. Why? Investors are nervous and see gold as a safe bet. Chip stocks like Nvidia took a hit after the U.S. blocked exports to China. Nvidia even warned of a $5 billion earnings charge due to China trade restrictions. And BlackRock's CEO Larry Fink said we might already be in a recession. Yikes. Looking ahead, expect more volatility. Tariffs, earnings, and economic data will keep markets on edge. But Yardeni's contrarian view gives us hope. If everyone's too negative, stocks could surprise us. So what should you do? Consider increasing your monthly 401k contributions or stepping up your dollar cost averaging. Wondering what to do about the cash you have been keeping at the bank or a money market fund? It is time to start putting it into the shares of great companies. That's it for this week's update. Markets are wild, but we're here to help you navigate. Want to talk about your investments? Reach out for a free consultation. Drop a comment below with your thoughts on Dr. Ed's contrarian take. Hit that like button and subscribe for more updates. See ya.